Have you ever wondered why the world's biggest corporations don't follow the same calendar you do? Behind every billion-dollar report is a hidden structure, the accounting calendar. Our story begins 7,000 years ago in Mesopotamia. Early civilizations needed a way to track bartered goods, livestock, and crops, leading to the first records ever kept by humanity. In 1494, a Franciscan monk named Luca Pacioli codified the double-entry bookkeeping system we still use today, setting the stage for modern global commerce. For most of us, the year is simple: January 1st to December 31st. This is the calendar year, used by roughly 65% of businesses like Amazon and Google. The IRS often requires sole proprietorships and partnerships to follow this cycle because they aren't legally distinct from their owners' personal tax filings. But what about the fiscal year? This is any 12-month period that ends on a date other than December 31st. It's a strategic choice for businesses with seasonal cycles. Retailers often end their year in January or February. Why? To capture the full holiday sales and return cycle when inventory is lowest and cash is at its peak. Governments do it too. The US federal government follows a fiscal year from October 1st to September 30th, while the UK and India use an April cycle. The US October start was originally designed to give Congress enough time to approve the budget before the new year began, a tradition born from administrative necessity. But the standard Gregorian calendar has a fatal flaw for businesses: months aren't equal. Some have 4 weekends, while others have 5. In retail, weekends account for up to 60% of weekly sales. If one month has more Saturdays than the same month last year, your data is instantly skewed. During the Great Depression, this inaccuracy became a crisis. Retailers realized they needed a system that allowed for apples-to-apples comparisons every single period. This led to the birth of the specialized fiscal calendars. The most famous is the 4-4-5 model, which divides the year into 4 13-week quarters. In each quarter, the first 2 months are exactly 4 weeks long, and the third is 5 weeks. This ensures every quarter is identical in length. While some use 4-4-5, the National Retail Federation often prefers the 4-5-4 pattern, which better aligns with specific holiday shopping weeks across different years. The first big benefit? Fixed end days. Every accounting period ends on the same day of the week, like a Saturday, simplifying payroll and inventory counts. The second benefit is comparability. You can compare the third Saturday of this year's first month directly to last year's without any calendar noise. It aligns your finances with operations. Metrics like sales per labor hour are now grouped into clean 7-day increments, making data actionable and clear. Setting up these complex calendars can be a headache, but you don't have to do it alone. Visit everythingcalculators.com for specialized tools that handle the math for you. But wait, there's a catch. 52 weeks times 7 days is only 364 days. A solar year is 365.25 days. Every year, you lose about 1 full day. To stay aligned with the seasons, these businesses must add an extra 53rd week every 5 to 6 years. Our next one is coming up in 2029. This 53rd week can make year-over-year data look inflated, as you're comparing 53 weeks of revenue against 52. Accurate accrual accounting becomes vital here. Ready to switch? It's not just an internal change. You'll likely need to file IRS Form 1128 to officially change your tax year, a process that requires professional guidance. Global companies face an extra challenge: consolidation. They must map their specialized fiscal calendars back to the standard Gregorian systems used in other countries. Even monthly rent and utilities get tricky. A 5-week month might capture 2 rent payments if you aren't careful with your accruals. It's a game of precision. Despite the complexity, the accounting calendar is the foundation of financial transparency. It's how we ensure that every dollar is accounted for in context. The 4-4-5 system remains the gold standard for those who need high-precision data in fast-moving industries like retail and manufacturing. Mastering your accounting calendar is the first step to financial mastery. Head over to everythingcalculators.com to use our smart calculator and simplify your planning today. Don't forget to check the link in the description for more advanced tools. Thanks for watching this deep dive into the world of accounting. Did you know? The concept of a leap week in 4-4-5 calendars is essentially the fiscal equivalent of a leap year. Accounting never stops evolving. The Industrial Revolution pushed this further. Railroads and car companies needed better reporting to attract investors, leading to even more specialized periods. In the 1930s, the establishment of the SEC made these detailed calendars even more critical as public transparency became a legal requirement for large firms. Because Saturdays alone can be 40% of a retailer's week, losing even one Saturday in a monthly comparison can hide real growth or mask a serious decline. Some companies use a 5-4-4 pattern. This places the longest month at the beginning of the quarter, which can align better with specific manufacturing production cycles. Modern ERP systems like SAP and Oracle have built-in modules for these calendars, but they still require careful initial configuration to avoid decade-long errors. Choosing a natural business year means your financial statements are at their cleanest when you're done with your busiest season, making your audit much smoother. Auditors love fiscal years that end after the peak. There are fewer transactions to verify, and the physical inventory count is much easier to manage. Remember, these calendars only work with accrual accounting. Cash basis accounting doesn't benefit from the precision of 4-4-5 or 4-5-4 structures. Some advanced systems even use a 13-period year, where every period is exactly 4 weeks long. It's the ultimate in comparability, but it complicates payroll. The 53rd week happens because our solar year is slightly longer than 52 weeks. It's a rhythmic correction that keeps your business in sync with the sun. When mapping to standard months, accountants use bridging techniques to ensure that quarterly reports still satisfy statutory regulators in different regions. The golden rule? Once you pick a calendar, stick with it. Consistency is the only way to build a reliable history of financial performance. Always consult with a tax professional before making the switch. The accounting calendar is a powerful tool, but it must be handled with expert care. We've covered 7,000 years of history and the future of fiscal planning. You're now ready to master your own accounting cycles. One last reminder, visit everythingcalculators.com to start your journey today. Precise math for a complex world. See you there.